Okay, so this is the topic of taxes and subsidies. Taxes are divided into mainly two categories. One is direct tax, which is imposed on income, property and profit of the business, and indirect tax is imposed on prices of goods and services. And now moving to the questions, and taxes can be progressive, regressive as well as proportional. Progressive tax is when progressive tax is a type of tax in which when income increases, tax rate will also rise. So in case of progressive tax, when income increases, tax rate also increases. And in case of regressive tax, when income increases, I'm using Y for income, and I'm using TR for tax rate will fall. And in case of proportional tax, if income increases, tax rate will remain the same. If income falls, tax rate will again remain the same. The government puts a $2 tax on each $8 videotape sold. As a result, the price of a videotape rises from $8 to $8.5. What can be concluded from this? And the correct answer for this question is option C. Incidence of tax will fall mainly on producer, because if government imposes $2 tax and producer is in the position to increase price just by $0.5, it means $1.5 will be paid by the producer himself. So most of the incidence mean tax burden will fall on the producer. Now moving to question number 2, which is a description of indirect tax. Indirect tax is basically a tax that is always regressive in nature, and it is basically imposed on spending of individuals. So option C is correct answer here as well. They are levied on spending, mean they are included in prices of goods and services, and they are regressive in nature, because when everyone is paying the same amount of tax, it means the rate of tax for the rich class will be lower than the rate of tax for the poor class, although the amount of tax is fixed. For example, if government imposes $15 tax on a certain product or on every product, then it means that the person who is earning $1,000 will be paying $15, and the person who is earning even $10,000, he will also pay the same amount of tax. So it means $15 will be very smaller percentage of 10,000 as compared to 1,000. So it means the poor class is paying with greater percentage and the higher class is paying with smaller percentage. So that's why it is called regressive. Now moving to question number 3. In a country, income tax is charged at $50 on an income of $500. 50 is basically 10% of 500. You can find 10% of 500 as 500 multiplied by 10 over 100. So you can cancel out these zeros. So 10 multiplied by 5 is equal to 50. So it means this is 10% of 500. Okay, compared with this, which of the following would indicate that the income tax scale was progressive? Progressive means if income increases, tax rate should rise more than 10%. Tax rate should be more than 10%. So if we see option A, it is less than 10%, because 10% of 2000 will be 200. So it is even lesser than 200. So it is not progressive. Tax rate is falling. And in this case, tax rate is exactly 10%. 3000 into 10 over 100, that will be 300. So this is not correct answer. And now moving to option D, 5000 out of 5000 income, 480 is paid in taxes. So 10% of 5000 is basically 500, but the amount paid in tax is less than 10%. So this is again not progressive tax. Option C is correct answer. 10% of 4000 will be 400. It means that now we are paying 450, that would be more than 10%. So this is greater than 10%. So option C is correct answer. And as per the nature of progressive tax, when income increases, tax rate also increases. Okay. Now coming to question number 4. A government taxes the production of cars. What is likely to decrease? When government taxes production of cars, it means that now lesser cars will be produced by the manufacturers, and when lesser cars are produced, then what will happen? What will decrease? Cost of production, cost of supplying cars will decrease. This is not correct answer, because if tax is charged, it means cost of supplying cars will rise. And then moving to the second part, the price of cars will also increase, it will not decrease, because when tax is charged, price of cars will rise. Option C is the revenue for the government tax revenue will also increase instead of decreasing. So this is again incorrect answer, because if government is charging more taxes, it means tax revenue should rise. And the last option, which is correct option, is D, the supply of cars at every price. We know that when indirect tax is imposed, it reduces supply and shifts supply curve to the left, so supply curve will move to the left. So supply of cars at every price will decrease as compared to the previous supply. So D is correct answer. This is the last question for this video lecture. The graph shows the percentage of tax taken from different levels of income by 4 different taxes, which illustrates a regressive tax. Regressive tax, as I told you earlier, is a type of tax. Regressive tax is when income increases, tax rate falls. Okay, so this means that there will be negative relationship between income and tax rate. This is income. If income increases, tax rate should fall. So this is basically happening in option D, because in option D, when income was this much, this was income and this was tax rate, and this is R. And if income increases, for example from Y to Y1, tax rate will fall from R to R1. And similarly, if we further increase income, then tax rate will further fall. So it means that in option D, this negative relationship is observed, so option D will be the correct answer. So this is it for this lecture. See you in the next class, inshallah.